Good afternoon. I'm going to present a video today, which is it still involves law and politics, but it's a little less involved in the politics. I saw the IRS put out a press release the other day saying that it's with the money it got from this Inflation Reduction Act, quote unquote, it's going to increase audits on the rich people. They're going to hire 3,700 new agents to audit primarily those making over 10 million in annual income, and also large corporations with assets over 250 million. For example, typically those who earn over 10 million, they have a 10% audit rate, 10% chance of being audited, and IRS wants to raise that to about 16%. To give you some perspective, the chance of an average person getting audited is under 1%. The Treasury has also vowed that it's not going to increase audits on people earning under $400,000 a year. And that may seem to be a great news, but it's actually not. Why? Because currently, because of the numbers, the vast majority of like 80% of all audits are for those making under a few $100,000 a year. That's because there's so many of us. In fact, the group of taxpayers who get audited more than any others are those earning under $25,000. Yes. That's primarily because of audits with respect to child tax credit and earned income credits. Bear in mind that if you don't make that much money, you're probably not going to hire someone to do your taxes, or it's going to be, a low budget place. And you'd probably be interested to know the chance if you go to one of the nationally advertised chains, I won't name any names, that do tax returns. Can you guess what the error rate is? What's the chance if you go to one of these chain stores that your tax return will be wrong? It's about 100%. The tax code is very complicated. So most of the audits, by numbers, more than anything else, are by people who don't make much money, who claim the child tax credit and didn't do it correctly, and that's where the money is. Also, you have to realize that, and I'm going to say overall, that just like any other job, any other government department, the vast majority of IRS agents are honest and conscientious about doing the job, but there's always a few that use bullying or misleading actions in order to try to get the most collections. I've never practiced tax law, never been a really tax practitioner. I've had to dabble in it from time to time for my other work I've done, but I did study tax law at NYU Law School, which is the #1 tax school in the country, and I enjoy learning about it. So, and also over my career, I've primarily associated with people of high net worth or with large companies, medium to large companies, that employ highly sophisticated people to do their tax work. And here's something: when the government talks about tax cheats, wealthy tax cheats, what's going on really with these people is, by and large, I'm not going to say everybody, by and large, if you're making over $10 million a year, or you're a company with a significant number of assets, you're not hopping down to the strip mall down the street to have some guy do your taxes. You're going to hire not just a CPA, but a tax CPA that has likely been trained in one of the big four accounting firms, and they're going to be conservative. They don't want their license to be threatened by somebody taking deductions or by taking tax positions that are wrong. So when the IRS says it's going to recover lots of money from these high income or net worth people, it's pretty much political window dressing. When you have to look at, let's compare, even in the, it's called the Large Business and International Division, where the taxpayers, individual taxpayers, generally have a net worth of 10 million or more. They should have the most elite and most experienced revenue agents, but my experience is that they really don't know very much. They may know certain areas very narrowly. They may know the procedures to go about in an audit, but they just don't have the training, the education, or the intellectual ability to really go toe-to-toe against someone who's been trained at a big four accounting firm or even a large regional firm, and certainly not somebody who's got a tax law degree. And bullying doesn't work against these sophisticated people. They're not going to have very much luck in getting more revenue. There have been, I think the area that I would say a lot of people in the IRS would like to go after has to do with transfer pricing. But that's a very difficult area to make headway in when you're contesting someone's tax return. Transfer pricing is as old as the hills, and basically what it involves is, let's say you have a company with operations or subsidiaries in more than one country, and one country has a high tax rate and the other one has a relatively low tax rate, and you have products, mostly products, sometimes services, that are being produced in one country, transferred to another country's subsidiary, and maybe another country. So what the company naturally wants to do is it wants to price the products from one company to another at a price which puts the profit in the low tax jurisdiction. And if it's not done to the extreme, it can be a very difficult thing for the service to fight. For example, let's say that you make telephones, and the raw materials in this phone is over $1,000 new. The raw materials in this phone probably cost under $5, maybe under $10. They're processed, they're made into different electronic components, and so at one stage the components, they have a value with all the work that's put into them, and let's say $80. And then that sub sells it to another subsidiary, transfers it at a deemed price of, well, they could sell it at $121, or they could sell it at $500. Where do they want to keep the profit? How do you argue what's a fair price? That gets to it really comes down to negotiation. It comes down to how much time and money does the international company want to spend fighting it. That's entirely what it is. Anyway, this is a fascinating subject, and because I love learning and figuring out tax law, it's something quite enjoyable to me. But you have to realize that there ain't going to be any great additional taxes collected. This is for political posturing. earlier this year, the IRS crowed that it recovered I don't know how many hundreds of millions of dollars from rich people. Well, the reason why this happened is these persons, companies, and wealthy individuals had already been adjudged to owe the money. They were in collections. The IRS didn't do anything. They just let the file collect dust somewhere, and then they suddenly decided to push and start collecting. So nothing really new is happening. This is just the way it is. And, well, that's how our tax code is work. So if anybody wants to learn more about these kind of issues, let me know. I'll answer you. And I haven't been bugging people, but if you can subscribe, that would really help me out. Thank you so much.